Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks with another video and a Christmas special. So, Merry Christmas to all of you and hope you're doing well. And today I'm going to talk about 10 companies, in my opinion, which are mid cap, larger small caps to mid caps to even large caps which could do extremely well over the next 2 to 3 years. So it's a 3 year perspective basically because I believe that the market could be up and down next year. So keep a 3 year perspective and we'll talk about these 10 companies and I'll explain as to how to go about buying them, etc. Again, so a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not a member of the NSC and BSC. I'm not a portfolio advisor. Whatever I discuss here is purely on my education background, purely on my, you can say, being in this market as a retail investor for the last 11, 12 years. And I'm trying to impart my knowledge to you all. So that's the call that if you take any financial decision with respect to investments, looking at my videos or any videos for that matter, on YouTube, kindly take that on note that it is laden with market risk and whatever investment decisions that you take, kindly do consult your financial advisor. So before I talk about these 10 companies, here's a small request. Kindly support me on Patreon. And once you do that, it will help me grow a channel. Help you also ask me questions, seek out answers in greater detail. You'll have access to my portfolio, long-term portfolio as well as trading portfolio that I keep maintaining and changing. Analysis on different companies, sectors, which sectors are doing well, which sectors are set to do well going forward. We have all those discussions on domestic and global markets. I do update watch list after a week or two. So that is their updated watch list. And any queries you have, any number of queries, you can ask me there. So you can support me on Patreon with a $10 membership, or you can be a member on your WhatsApp as well on a yearly basis. You can email me for that. So in order to understand about these 10 companies, I'll take you to the screener website and you would be able to now look at it that what are those 10 companies that I'm talking about. So basically, let me just give you in a nutshell. So somebody who wants to just watch the video till now can do this, but I'll discuss about each company in a little bit of detail and let you know as to what I feel about them from a 3 year perspective. So I have diversified this so that if you're making a new portfolio at this point of time, then you can have a diversification and have investment into different sectors. So from the IT space, emphasis and intellect design looks good. From the chemical space, because chemical is something that is beaten down for the last 2 3 years and at least the last couple of years, so I think it could make a comeback. So Naveen Fluorine and SRF top chemical companies are in there. From the consumer space, consumer food space, BKG Foods is there, and I'll take this as a new age slash consumer slash Nasdaq play, that is Zomato. Then because I had to fit in 10 companies, so I would have put in more new age companies, more pharma or other sectors as well, say the government oriented sectors. But then I tried to mix and match so that we'll have a 10% allocation in each if you're buying into exactly these 10 companies, and you'll have all the sectors. HBL Power Systems comes into, you can say, autos as well as railways, etc. So that's why I kept it here. Titagar Rail, because of the government push for infrastructure, I think this is the best company to play that for the next 2 3 years if the same government comes in. Divi's Lab, because of the pandemic that might just come back and it is happening again. You have the test increasing, etc. So let's have some exposure to pharma through Divi's Lab and hospitals with Apollo Hospitals. So completely diverse kind of you can say portfolio with you having hospital, pharmaceutical, railways, you have power systems, and you can say autos in their new age company, food company in Bikaji, which is into the consumer space. If that does well, two chemical company in SRF and Naveen Fluorine. Then you'll have two IT companies. If the IT or the export oriented businesses really do well, then Intellect Design and Emphasis is in there. So these are 10 companies. You might mix and match. Probably if you analyze, then you might find only 4 5 of these companies good enough to invest at these prices, etc. So you can do that. But this is what I have come up with in this Christmas special for the next 3 years, that these companies do look good. Let's go one by one, in a short span of time, 1 2 minutes on each. Emphasis is a leading player in the Internet of Things, and you can say the new age technology and platforms systems. 51,000 crore market cap, a larger mid cap kind of a company, so safer bet. And it has just about broken out. So normally it trades around 2500, 2400. It was doing that, and suddenly because of this spurt and the news that there'll be interest rate cuts in the US, that the Fed is talking about, we have seen a spurt. But if you see a 5 year chart of Emphasis, then you'll understand that its high has been around 3400 and its earnings have increased. So if you look at it on a year basis, FY21 they did around 9700 crores, FY22 they did 12,000 crores, FY23 they did 14,000 crores or near about. And the profits have also increased, so the EPS has also gone up. From 65 rupees it has gone to 87 rupees, but the price has come down. So basically what has happened is that in all IT companies virtually, the PE ratio has shrunk from those highs of around 45 46 all the way to around 20 21, and now it is cropping up again. So I won't be surprised in 3 years time you'll see the same sort of PE of around 40 45, and that is why the PE expansion will lead to the price increase, and you'll see a decent up move hopefully going forward in the next 3 years time. These stocks could be somewhere else. Second in the list is Intellect Design. The same thesis apply, that the PE is shrunk over a period of time and the numbers are pretty good. Although numbers are up and down for this company, but this is a smaller IT company, 11,000 crore market cap company. It is just about breaking out. So what had happened is that 740 750 used to be its, you can say, highs, and if you see here the 5 year high is around 960. Now it is headed towards those levels of 960 and beyond. And if you look at from the PE perspective, during the pandemic it went up to 68, and an average PE at the moment, from a 3 year perspective, is around 30, and it has just crossed that. So again, numbers should improve going forward because of the economy improving in US and Europe, and hopefully with this interest rate cut this will spurt. And if you look at the numbers, it's not bad, not that great, but not bad either. You have a 40% growth, 19% margin from 15%, and things were looking pretty good even in the September quarter. So again, a stock to look at from a 3 year perspective at these levels look good. On a slight decline would be even better. So what you can do is you can probably divide your investments over a period of 2 3 months and put in the money in that manner. Third in this list is Naveen Fluorine, again a smaller pharma, a smaller chemical company. You can say a larger small cap at 18 19,000 crores. A PE of 51 it shows there, but because of the numbers curtailing. But if you look at the price chart, it has nosedived from around 5,000 4,900 levels all the way to 3,400. It has collapsed 30%, and now the stock is now coming back into focus. And the reason for the price damage has been their numbers. So from around 1,000 crores in March 21, they did around 1,200 crores. They did a profit of 260 crores, and this was the dip. So basically what happened was, from 21 onwards, when they did 260 crores of net profit, the numbers have been up and down, and it has been right there. So around 360 crores they did in FY24. They are going to do around 360 380 crores. So from 260 to 380 crores in 3 years is not that big. Again, on the sales front, from sales front was pretty good. From 1180 crores they have jumped to around 2300 crores, but profit hasn't been that great. And now things are coming back. Raw material prices, China dumping were the factors, and now things are coming back because of global economy improving, and that's what it seems like. And the stock, in terms of PE, in both the cases, these stocks have come down sharply from 2021 being having a PE of around 85. The PE has shrunk completely to around 70, to around 47, dropped sharply. So I believe that it's time that these chemical companies could come back. So Navin Fluorine is one SRF with the same thesis, but a larger, you can say, chemical company could be looked at these levels. Again, a stock that doesn't fall a lot. It didn't fall a lot even in the sell off in the chemical industry from 2600. It did go to 2100, and there was a 20-25% fall, but not a 35-40% fall, and it has recovered sharply. So again, this is a better company to look at. In terms of margins, etc., also much better at 25%, but the margins, see, the margins have shrunk from 27% all the way to 20%. I think this is the bottom of these margin picture for these chemical companies, 18-20% or so. I think margins going forward from the second half of next year should improve. So over a 3-year perspective, from a 3-year perspective, again, this company looks good for a decent upside. Coming to the consumer space, now there are many companies in the mid cap and the large cap consumer space into different divisions. We have Varun Beverages, and there are others that are in various businesses, say bakery and other snacks and so on and so forth. We have QSRs. Why I choose Bikaji is because of their numbers, the kind of numbers it is producing, the kind of charts that Bikaji has at the moment. If you look at it, if you look at the numbers in the September quarter, there is 600 crores, and in the next quarter in December, they are set to do even better. So probably in the December quarter, they will end up doing something like much better, because the Diwali factor would kick in December. So I think over the next 3 years, this is only going to get better. So they did around 610 crores on a consolidated basis on the sales front. But you look at the margins from around 6 to 8% to maximum 10%. Now it has gone to 14%, and they are talking of 14-15% margin for the next, you can say, 3-4 quarters. And I think it is only going to improve with the inflation coming down going forward. I don't see inflation going up further. I think inflation might have peaked out in the last quarter for these kind of businesses, and so numbers on the bottom line should look much better. And look at the kind of growth: 60 crores of profit versus 41 crores of profit last year in September. So things are looking much better. I think this is going to do well. Again, buy in tranches. It is at highs, so buy now, buy on dips, and accumulate. Next in this list, because of what is happening in the Nasdaq, because of what is happening in US, and the fact that Zomato is coming back into profitability, and a larger, you can say, mid cap company at that, at 128 rupees looks good. Again, I'm playing on the fact that because of this consumerism and the fact that many people in India now order food online, I think this is only going to get even better, say, for the next 3 years. So say on the sales front, I think they're going to do 10,500 to 11,000 crore this year, and in 3 years time, I think this should at least go up 120-130%. So we are looking at a scenario where 25,000 to 30,000 crores of sales, 27,000 crores of sales would take place. Based on that, it is trading at merely 5 times or so. If I take 27,000 crores of sales for say FY28, then we are talking of the stock trading at only 4 times sales, and it cannot be like that. So the profitability will increase for the next 3 years. I think Zomato is going to do extremely well. Could trade at even, or could even triple from here, double to triple from these prices, and that's why people are really gung-ho on the stock and buying into it. So this is a stock that could do extremely well for the next 3 years if the numbers continue to be the way they are. Next in list is HBL Power Systems. Now many of you might know about it, that they are into this coverage space. They are into their you can say you can say technology or train technology, in which collision, anti-collision train technology, etc. And they are doing well because of that. A lot of orders are coming into the business. 12,000 crore market cap. I think this is going to become even bigger. This whole, you can say, sector of infrastructure, railways, shipping, and you can say road transport, etc., should get, defense should get much better. And they are into everything. They are into defense, they are into railways, they are into infrastructure and infrastructure ancillary products, etc., and electronics. So they this is a very interesting conglomerate company, a small cap company. They are into electronics, as I said, railway electronic systems, TCAS, train collision avoidance system. They are doing that. They are doing the coverage thing, electric mobility. They are into defense. So very interesting business, batteries, etc. So very interesting business. I think going forward, this should be big in next 3 years. So this is something to really look at from that perspective. I think this can be anything in the next 3 years. I won't put a figure that okay, it will go up 15-20% or something like that. Let's look at Titagarh Rail. So we all know about it, 14,000 crore market cap, but they have 28 to 30,000 crore kind of order book, and I think order book is only going to swell going forward with the transformation that in the railway system that is happening with the Vande Bharat train and everything. I think in 3-4 years down the line, it could be something else. So I think this journey is a good 10-15 year journey that has started, or at least a 10-year journey that has started in 2021-22. And so by 2030, these stocks could be something else. So if you buy now or buy in staggered manner over the next 1 year, because the market could be up and down, then in the next 3 years, say by 2027, you're going to make big money in from these kind of government oriented sectors in which government infrastructure push is there. So that is why I picked this up. It is expensive at the moment, so buy on again on staggered manner. Now, two stocks from the pharma slash hospital businesses, etc., because this is something which is going to be a long term trend. So, I think pharma is again coming back into the picture, and the top pharma company, in my opinion, is Divi's Lab. So, let's go safe with this kind of a portfolio in which we have 8-9 companies which could do extremely well. Let's have a Rahul Dravid in this, you can say, portfolio which could perform seemingly seamlessly over a period of 3 years continuously, say on a CAGR of 15-18% or even better from these prices, because the prices have dipped. In terms of the PE ratio, the PE ratio has expanded, but if you look at market cap to sales, it's not very expensive. So around 12 times is its average. It's trading at around 13 times, and it's going to become better. So if you look at the yearly sales, it went to 7,000 crores, then 9,000 crores, and then dipped in March 23, and I think it's going to dip in March 24. So 2 years in which sales have dipped, I think they are going to come back and come back big into fashion because of US economy getting better, and because of the fact that there is a chance that their drugs will be required even further because of the increase in cases that we are seeing. So we have to play that out as well. So let's have 10% into this. And the last one in the list is Apollo Hospitals. Again, a very good franchisee in which they have made a lot of money for the shareholders. In terms of the hospital cost, I understand that they just keep going up. So let's play it out by buying their shares. So if you have to pay, unfortunately, if you have to pay in these kind of hospitals, you have to pay a big price for being in the hospital. So make money from the stock, and that could probably soothe you a little bit. And I think this will just continue. Look at the numbers: 4,800 crores of sales versus 4,200 crores of sales on a very high base. They are producing very decent margins, and year on year, 550 crores have become 630 crores. That's a good 15% increase, and continuous increase in profitability and bottom line and all. And this is sustainable. This is something that is only going to get better. At the moment, the hospital business altogether is not at its peak, and unfortunately it gets into peak when there is a pandemic, when there is some kind of a situation. So 80,000 crores safer company again buy in staggered manner. So this is something to look at from a 3-year perspective. So in my opinion, emphasis, intellect design, Naveen Fluorine, SRF, BKG, Zomato, HBL Power, Titagar, Divi's, and Apollo looks good. There are other companies in the vicinity, say a Kilpest for that matter, then a Naukri, then a Nykaa, other platform companies in there, NetWeb, and many others. There are many in the small cap domain, in the mid cap domain. Say I have not picked up anything from the real estate. You can pick up a Shobha. Shobha is that is looking good. Prestige Estate. Godrej Properties. I mean, the list is endless. I mean, there could be 25, 30 companies that could just fit in here and make you money. But I picked the 10 that I feel are going to do extremely well because of their fundamentals, because of a scenario in which how good they look from a 3-year perspective in terms of their business. And you could change again. Disclaimers do apply, so kindly take that on note. So this was a video on these 10 companies that I like from a 3-year perspective. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot.